You are watching or listening to Purham and Associates. For more information, go to www.rpurham.com. Hey, good day to you all. Welcome to Permanent Associates. I'm your host, Randy Purham. And hey, I hope y'all had a fantastic week so far. And of course, it is Friday. And this is the time that we take to thank our men and women who are serving our nation around the world, sacrificing and committing their time, their freedom, in protecting our freedom, our Constitution, our way of life. And we thank you. We want to salute you. We wish you a safe journey back home to your friends, family, and loved ones, wherever they may be. And yeah, there's a lot going on this week. But nonetheless, we're getting through it. We're getting through it. A lot of craziness going on out there. But I got a very special guest with us today, and we're gonna talk about some of the craziness. And so we have none other than Mark Quann. He is the author of "Be Smart, Pay Zero Taxes." Use the buy, borrow, die strategy to get rich and stay rich. And he has spent 13 years as an investment advisor representative. And without further ado, introducing the some and presenting the others, Mark Quann. Hey, good morning, sir. Good morning.
Good morning, man. Excited to be on the show with a fellow author like yourself. Thank you
Yeah.
for your service, by the way. My co-author was a big tech guy. He actually resigned after 9/11 and went and served and got blown up. So he's a disabled veteran, but I know a lot of veterans and I appreciate all of them.
Yes, thank you. Thank you for that. Thank you. Awesome. That yes. A lot of my friends actually coming out of well, we was already out of high school, but a lot of them was like in their careers. I was already in the military. I
Yeah,
went
yeah,
on that
okay,
path, and 9/11 happened. I was stationed in Germany at the time when it happened, and
okay,
a lot of them
yeah.
had quit their jobs and stuff like that and joined up, and actually ran into a couple of them in Iraq. A year or so later, and so it was pretty interesting to hear their stories and the dynamics that they went through as well. Some some actually got injured as well and came out of the service and stuff like that and went back into the profession. So it's one of those call to duty type of things. You just get that impetus into you to want to get serve your country and sacrifice whatever it is that you need to sacrifice and then come back home. So it's one of those things that we do. But
Yep.
Mark, I gotta ask you before we get started into our discussion here.
Okay.
We're not going
Yeah.
to talk about anything that's going to put somebody in jail, will it? Well, are we?
No, no, no.
Okay,
This is my fourth book, by the way. I do major amounts of research, and we follow all IRS tax codes.
okay, awesome. I had to put that
Yeah.
disclaimer. Had to get that disclaimer out there for the audience because they were like, "Wait a minute, pay zero taxes? What?" And so, no,
So
that's awesome. That's good. Good deal. Good deal. I'm a proponent of abolishing the 16th Amendment. Or getting rid of it, repealing it. And ladies and gentlemen, those that are listening and watching, if you're not familiar with the 16th Amendment, and it's amazing that a lot of people are not. It states that Congress shall have the power to lay and collect taxes on incomes from whatever source derived without apportionment among the several states and without regard to any census or enumeration. What you're telling me, Mark, is that there's a way around that.
Absolutely. And it's not a new strategy, by the way. And just so people understand my background, I was a financial advisor for 15 years. I was the guy training hundreds of financial advisors. I was the financial advisor for many CPAs. So this is my fourth book. I've been studying finance for 20 years. I was very frustrated in the financial industry because the financial industry doesn't teach you the same strategies the very, very wealthy use. They kind of teach you the strategies that middle America, they just don't work. Like retirement accounts are pretty bad investments. Even the creator of the 401k, Ted Bana, was very critical of the plan because it seemed to be enriching Wall Street, but not really retiring people. So again, I've done 4 books on this, different topics from the banking industry, how corrupt they are. But there's one big problem is that 99% of the financial advisors and CPAs that are helping middle America were actually educated by Wall Street and big government. Just the word retirement itself was created by Wall Street to convince Americans that they should go work for a corporation and slave away and pay taxes all these years. And the word retirement account was also creation from Wall Street and big government. So if you think if you agree that you have to work until you're 65 or 70, pay massive amounts of taxes, your retirement account's just deferring taxes, and it's deferring income taxes, and it can actually trigger the taxation on your Social Security payments. So these are all IRS tax codes, but the problem is we're being educated by CPAs and financial advisors who don't know how to do it themselves. That's kind of a scary thing, and it's all documented in the book. The term buy, borrow, die comes back to the Great Depression. There's a banker named Mark Pat Monroe, and in Quincy, Florida, he created more millionaires out of just farmers and things like that, using this buy, borrow, die strategy. Specifically, there was the Great Depression. This investor banker said, hey, he told all his clients, buy Coca-Cola stock. It's really low right now, but everybody's drinking Coca-Cola. Just keep running it. And he actually lent them money. So they didn't have any money, but he said, hey, I'll lend you $2,000 to buy Coca-Cola stock. So they would invest in Coca-Cola, but then they would lend them money secured by the stock. They would lend them like another $2,000 to buy tractors and farm equipment. Yeah. Well, they borrowed one, and then they borrowed from that. And he created more millionaires in the United States during the Great Depression than any other time in history. So the strategy is not new. It's been going back to the Great Depression. It was actually coined at the University of Southern California. Buy assets, borrow from them, never sell them, die with no taxes. So buy, borrow, die. It's pretty a simple strategy, actually.
Yeah. And I heard that same strategy before as well, just coming up over the years, dealing with different financial advisors and stuff like that. And the concept is interesting. But you have to be very disciplined to do it. And not tempted to say, you know what, okay, my assets right now is worth this, so if I sell it, I stand to gain more, not realizing that, or thinking about the fact that once you sell that asset, it's no longer your cash cow. It's no longer producing an income for you.
You kill the asset.
Yeah, you kill the asset, exactly. So you get rid of that asset that's no longer producing income for you, and so now you just have the I guess you say the yield from that asset to deal with. And now you got to figure out, okay, what do I do with this asset now that will generate more income for me? And that's where people get into that trap, and they never find success in that mode. And so it is an interesting concept, the buy, borrow, die. Like I said, you just got to be disciplined with it. And I wanted to ask you, with that, the idea of real estate is a vehicle that you can utilize to do your buy, borrow, die strategy, correct?
Correct. Yeah, it's typically been used in real estate. People don't realize that when you sell assets, you kill the asset, you kill the future compounding growth of the asset, you trigger taxes. But rather than doing that, if you just took a low interest loan from it, that's actually new money that you didn't have to work for. You didn't pay taxes on, and you buy another asset. People do it all the time with real estate. They just don't realize what they're doing. I imagine everybody, a lot of people listening to this have bought a home before, correct? Just buy a home. What did you do? You put a down payment. Maybe you put 3% down. Okay. So you had to work hard for that money. You had to spend your time, pay taxes, and fight inflation to earn the down payment. But where did the other money come from? If you buy a $500,000 house with 3% down, where's the $485,000? It comes as a mortgage document, essentially new money created in a computer. A bank just presses a button. They create $485,000 of new money in a computer, and then you use that money to buy your home. So you actually did borrow in that transaction. If you just grow that real estate and you die, you can die with up to $30 million completely tax-free. Now, if that real estate appreciates, why not borrow another 3% from that home? You would create literally hundreds of thousands of dollars as created in a computer as digital entries, and you didn't have to work for it. Getting rich is, I know it sounds cliche, but getting rich is easy. Just use buying and borrowing. We actually show people how to start with $100 in a brokerage account. So we show people of every income. I deal with wealthy clients. We do tax consulting for them. And I deal with people who've never invested and they're like, I'm kind of scared. Can we start with $100? And we start them with $100 investing in their iPhone.
Awesome. And ladies and gentlemen, for those that are like, man, you're right. Because I hear it all the time, but you're right. You're absolutely right about this. And for those that are listening and are not on the visual side of the house right now, you can go to www.theperfectportfolio.com and you can learn more about what we're talking about right now. Mark, explain to folks what they can find on your website there. I know you have a series of classes and stuff that you go into. So tell everybody about that real quick.
Just let me tell you a quick story. So I was this financial advisor until 2018, and I resigned because I was kind of disgusted with the industry. Everything they were proposing, put your money in mutual funds and retirement accounts and earn 10%. See, if you're in 10% return on your account, minus inflation, which is 5, minus 3% for taxes, it's almost mathematically impossible to win. Okay? So I'm a financial advisor, and I don't know how to, invest and retire early. I don't know how to pay taxes. I'm sitting with CPAs who they don't know how to not pay taxes, and they don't know how to retire. They're asking me, and it felt like the blind leading the blind. So I started a consulting company in California. We'd help rich people learn tax codes to avoid taxes, mostly using real estate. The company started, then all my appointments got canceled because of coronavirus. I'm like, what do I do now? All right, start a financial education company. So I started this thing called The Perfect Portfolio. We enrolled over the last 4 years over 500 students and just taught it to them over 4 years. Then it was actually Newsmax as a publishing company to write a book to prove that ordinary Americans can use the buy, borrow, die strategy. I was like, I'm pretty busy, but let's see if I can do it. And it took 11 months of just writes and rewrites and going back and forth, and then before we produced the book. So it's a great strategy. Anybody can use it. Our website, The Perfect Portfolio, it has tons of video content, just tons of content on it. I have a YouTube channel. We have testimonials from dozens of students who are using it, and it's actually changing lives. It's crazy to say it, but I will 100% create a million new millionaires with this course. You can put me on the record, and maybe take me 5 to 10 years, but I will go on record right now that I will create a million new millionaires with this course. Right?
Awesome.
I mean, we're going to put it into an AI app and power it with artificial intelligence in the future. But right now, we have to actually find people that want to raise their financial IQ, put the time in. I don't recommend this strategy for people that are just like dilly-dally. You really got to understand tax codes. You got to study it. You have to understand risk versus reward. There's no such thing as no risk. Find me something that's no risk. It's actually not true, right? So
that's true. That is true. There is no such thing as there's no risk in investment, especially when it comes to investing. It could be penny stock, and there's risk there because that company could go belly up overnight, and you're like, man, I just put $5 in there. I was hoping to make. Yeah, no, it's gone.
Yeah, yeah.
And,
Yeah, it's about a 99% chance of losing all your money, I would say, a penny stock. So,
yeah, exactly. And I actually learned that the hard way. It was about 15 years ago, maybe a little bit longer than that. It was. So I just put in a year. Actually, I can think about the year. It was 2010. It was right around the time Facebook went public with theirs.
okay.
There was another company called it was Pay, and
Okay.
they was like doing penny stocks at the time. And I
Okay.
had bought like 100 dollars worth of it, and like 3 days later, it was zero. It just shows zero, and I was
Zero. Yeah, yeah.
like, what the hell happened? And the company had closed because they no one invested into it, and no one, it was just like it was just a bust company. I was just like, wow, okay, I lost that money. All right, well, on to the next
Yeah,
one.
there it is.
Yeah,
Lesson learned.
yeah,
Lesson learned.
exactly. Yeah, but I did also buy Facebook stock at around that same time, and
Beautiful. Yeah.
it was tanking, and so I sold it. And then
Oh, no, you're supposed to buy forever.
I know. It was. I still hold on to the Nike stock from when Colin Kaepernick and that whole debacle went down about 5 years ago. I still have that. So
Good.
yeah,
Yeah, yeah. And
mhm,
you can take this very simple. You could buy something that you use like Nike stock, just auto buy it and never sell it for the rest of your life and just keep
exactly.
buying it. Especially in the down markets, keep buying it. When
Mhm.
it surges and goes up, you can take a loan and you could buy some Amazon stock. You could keep working from your job and buy Amazon stock if you use it. Never sell it. It keeps growing, makes lots of money. Then you could
Mhm.
borrow from that and buy Nvidia stock. They're doing all the AI, right, for
Ah,
Tesla and these
yes.
companies, and
Yes.
that could go up, and then you could borrow from that one, and you're doing exactly what the super rich do. They're not working.
Hmm.
They're not having to go to work every day to earn the money. It's never taxed if you don't sell it. And when you borrow, you circumvent the tax system because you didn't have to spend your time to earn the money. It's not taxed, and you didn't have to fight inflation when you do it, right? Anybody can put $5,000 in a brokerage account, buy 5 stocks that they use, and they could, if they had an expense, they could press the borrow button, send $1,000 to their bank account, and go start a business or donate that money to their church, and that would be a double tax deduction on money that didn't exist. So we teach people how to start businesses with it. We teach people how to
Yes.
buy real estate with it. We even show them how to tie to their church with the borrow button, because then you're building your wealth, never triggering the
Yeah.
taxes, and you're getting a double tax deduction on it. So we do all this stuff for our students.
Mark, I want to ask you now. See, you keep using this phrase, triggering the tax. Tell us how not triggering the tax. Give us walk us through how that works. Because a lot of people think that once you receive income, you're automatically taxed at that point because it's income. Because we're once again you're taxed on your income, so you have to report it that you're getting this income, right? Talk to us
Yeah.
about how you avoid doing that in terms of not paying taxes on all these different transactions and everything else, because everything that you're doing is considered income, but how do you avoid the tax on that?
Okay, it's pretty simple. We've identified 5 pillars. Okay. Stocks, insurance, which can't lose money. It only grows and never can go down. It's never taxed. Real estate is actually the secret to not paying taxes. You can actually buy real estate and you could use the short term rentals loophole, put 100 hours on Airbnb, and you can actually use the depreciation on that real estate to wipe out your W 2 paycheck.
Hmm.
People say that sounds too good to be true. They're all well defined IRS tax codes. Now, if you have income that's coming in that's not taxed and you put it into your brokerage account and you grow that and it's never taxed, you could then borrow to buy some gold and precious metals. You can buy gold and precious metals with a loan, which has never been taxed. And then you can invest it, you can vault it. There's a company where you can vault it, and then you can take a loan from that. You can even buy artwork these days, and you can have ownership in artwork. The art is insured, then you can borrow from the artwork and go buy some Bitcoin. When Bitcoin goes up, even on Coinbase, you can ride it up and you can borrow from that. Of course, there is risks in this. There's no such thing as no risk. You have to understand risk versus reward, and also what's called hedging. Hedging means, hey, I just got to make sure I have money on the side. I call it dry powder. You know, dry powder, right? It's like, hey, gotta have dry powder, right? Got to have money to shoot with, right? So you have to have money to invest with them when the market goes down. There's simple tools we use. If you go to CNN website and look up the fear and greed index, that measures fear. When the population's panic selling, like in April, I was massively buying because the fear gauge was so high. There's a point where the population's panic selling because they're watching CNN and all these other news networks, and all the same, they make money by selling fear. So if you react to that fear, you're going to fail miserably in this strategy. Buy, borrow, die is simple. Keep buying forever, never sell. See, income is the highest form of taxation. It's massive taxes plus the Social Security and Medicare taxes. It's not just your income taxes, then it's all the other 15% taxes there. Okay? That's the worst way to earn money, by working. So the rich go, okay, I'll work initially and I'll earn the money, but then I'll learn to invest. They grow the investments. They never sell them. And as those investments appreciate, they can borrow from one asset to fund the other. Again, stocks, ETFs, life insurance, real estate, cryptocurrency, and precious metals. And they just use that. That's why they're rich, because they're using IRS tax codes that are clearly defined. But somebody can come to me and audit me any day. I welcome it. Good. My CPA will simply document all the IRS tax codes, and the IRS can do nothing. Understand, there's people that get audited by the IRS, and then the IRS finds out they missed something, and they get refunds. If you're really good at, I have a great CPA, and I do, and I understand every single tax code, and I put it in the book, and it's not boring. That's the thing. I hate tax codes. I don't know if you ever read tax codes. They're the worst unreadable things in the world.
I agree.
All my books are very simple and very easy to understand, because I was a construction worker. I was a security guard. I mixed concrete. I've worked in factories. I grew up poor. I have 3 generations of poverty on both sides of me. I understand what it's like to be poor. So I have to take concepts and simplify them so a plumber can understand it. I taught buy, borrow, die to the guy who built my deck. I taught it to the guy who helped him build my deck. The guy who stained my deck, I taught him the buy, borrow, die strategy, right? I'm in Tennessee here. You know, you don't have to be sophisticated to do this, but you do have to put the time and energy to understanding it. I recommend at least 100 hours, just an hour a day, every single day for the next 100 days or 200 days. It might give you the tools to build wealth for your family, because your 401k is not going to retire you. I can actually show you the numbers on it. You're just going to work until you die if you currently fund your 401k and put some mutual funds and pay off your debt and work hard and pay taxes and rely on Social Security. This is not going to work. So the book is dedicated to ordinary Americans, by the way. If you read the front, it's actually dedicated to plumbers and electricians and HVAC workers and college dropouts like me that hated school and reading. So I hated school and I hated reading.
Absolutely. So, yeah, good deal. Good deal.
Yeah, you don't have to go to school to become a rich. You have to understand money.
You're absolutely right about that. You know, I think I read something about, it was about a few years ago now, that almost every CEO does not have a college degree. You know, they dropped out of school at some point or another, and they just understood money, understood how business worked, and they rose to the top without a degree and all that.
Yeah.
So you're absolutely right.
Yeah, I was.
Absolutely right. Yeah.
Yeah, I was in school for college and business and finance. I thought, this is the stupidest waste of time of my life. I was actually, every class I'm going to is actually useless. The professors don't understand business. They don't understand taxes. In fact, they're relying on students to go in debt to pay their salaries. They don't know how to retire. They're relying on like a pension or something like that isn't available to everybody. They pay massive amounts of taxes. They don't know how to invest. I'm like, why do I go to school? I dropped out and I came to California with no green card and got a job for $6 an hour as a security guard. And then I learned how to become a private investigator, making lots of money, started reading finance books. Then I became a financial advisor, spent 15 years. I realized, wow, that didn't work either. So I better go do something else. So
good deal. You know, I want to ask you, I'm going to come back to your book in a second here. The one big beautiful bill, right? There was a provision in there dealing with gambling. And for the
Yes.
professional gamblers out there, ladies and gentlemen, and when I say professional gamblers,
Yes.
I'm not talking about
Yeah.
exactly the one that gets in their car and drives up to the casino, down the street type of thing. I'm talking about, your hardcore gamblers that's they're dropping racks and stacks on
Yeah.
games.
Yeah.
So there's a
Yeah.
provision now in the big beautiful bill that which I didn't know existed in the first place, that you kind of I personally feel like a jackass because I like to gamble here and there on games and stuff like
Okay.
that.
Cool.
But I lose my money, I just go home, I just whatever,
Yeah.
it was there to
Yeah.
lose
Yeah.
or gain
Yeah.
something off of it. Don't think none of it. I did not know you could write it off on your taxes. So I was like, oh, wow, that's cool. But the experts say that the change could make professional gambling with large amounts wagered and lost in the U.S. entirely unprofitable. Democrat lawmakers are trying to erase the obscure two-paragraph provision from the law, but they carefully calibrated the bill that was approved with entirely Republican votes. But the thing is, gamblers now deduct all of their losses against the winnings on their taxes, but will have to
Yeah.
but will have that deduction reduced to 90% of their losses. Explain to us, talk to us about that if you can.
Gambling is it's like a job for them. They put a lot of time and energy into it. So I'm going to support the gamblers, although not many people are going to get affected from this. But yeah, you can only offset the losses based on your gains, right? You just can't write it off. But the change would say that if you're a gambler and you earned 100 grand in gains and you lost 100 grand, you only get to deduct 90%. So they're running on really thin margins, from what I understand. I'm not a professional gambler, by the way, but yeah, they would not be able to do that. So honestly, it's not going to affect many Americans. I'm not too worried about the professional gamblers in this country that do it. I don't believe in gambling. I don't gamble to make money. My wife and I will spend a few $100 in Vegas for fun,
Right.
but why would I want to gamble when I can just go buy stocks of the companies that I use every day, invest it, grow it with no work, and then borrow from it and not pay taxes? Like, it's just too easy to do that. Anybody can pick up an iPhone and do it. There's actually only two companies that you can use the buy, borrow, die strategy. They both talk about it in the book. One's called M1 Finances, one's called Robinhood. People probably own a Robinhood app. They don't even know they can use the buy, borrow, die strategy on Robinhood. But so I had to put this all in a book and just simplify it so people can do it. But yeah, for the gamblers out there, I hope you get your deduction back, because you're putting in the work. You know what I mean? You got to be good at that, right? So
Yes, absolutely. So let's jump into your book now. Be Smart, Pay Zero Taxes. Tell us what led you to saying, you woke up and say, you know what, I'm gonna write this book today. What was going through your mind and as to behind writing this book?
you know what? It wasn't really something that I meant to do. It was just I started this financial education company when the market crashed. I went on Instagram and I posted my investments, because during the coronavirus crash, I was very skeptical of COVID, to be honest with you. Skeptical would be an understatement of the word, but I was very skeptical what was going on. And I said, you know what? I'm going to put a triple short. So I was betting down on the market and I was making money. I was leveraged. And then I hit the bottom and I flipped it around, because the fear grade was into like 3, which means the population's panic selling without reason. Okay. So I put it on there, but then sorry about that. So, but then I went on my Instagram and I posted my trades on Instagram. So if you go back to my Instagram, all my trades were posted on there, and I was making a fortune, and I was texting friends and telling them and family and what sort of trades I was taking. And we were making a lot of money. And I was like, wow, I just made tons of money just doing what I know how to do. I should probably start a financial education company. We sat down with some friends. We said, what are we going to do? We called it The Perfect Portfolio. Now it's all trademarked, intellectual property, all that stuff. We own the phrase automate your income. But I'd been doing consulting and real estate, coaching rich people in Beverly Hills and Malibu and La Jolla on how to pay zero taxes using real estate. I'm like, wow, we got to put that in there. And then it just came to, again, getting a message from a major publishing company asking me if I'd like to write a book to prove that ordinary Americans can do it, that was very appealing to me. So, I'm very worried about the middle class. I said they're in a lot of don't quite know it because their financial advisors are like, oh, just add more money to your retirement account. I'm like, that's not going to work. And you can't count on Social Security to retire. So without Social Security, I did the estimates. I estimate that if anyone's under 50 years old today, they're not going to be able to collect any Social Security. And even if they did, it's not going to be worth anything after inflation. So if they don't have a significant brokerage account or real estate, I think most of the population is going to fall into poverty.
Wow.
I don't mean to. So I'm trying to work out that this strategy can be used by any American if they're willing to put the time. Like, just turn off your TV, stop spending 3 hours a day watching Netflix and Prime, put an hour a day. The book's actually on sale on Amazon. It's #1 tax book in the country, and just learn. Don't rely on your CPA to help you. Don't rely on your financial advisor. They can't do it. They're not going to get you there. So just rely on yourself. You're the quarterback. You're your own fiduciary. Just learn, get educated, take baby steps, and learn a little bit every single day. Okay? It'll transform your life because I know I've done it with over 500. We're going on 600 right now. So I do this every single day. I've got tons of content to do it. And I've actually helped a lot of the people who even interviewed me with this strategy. So radio hosts, I'm helping them too. I'm just like helping everybody right here. So
absolutely. And I appreciate what you're doing because it is important. A lot of people, like you just said, the middle class, especially the middle class, we take it for granted that, our paycheck is guaranteed or whatever your current income stream that you're currently having. If you've been getting it for more than, I say, a year, you kind of like fall into this this complacency of that's always going to be there. That's always coming in, no matter what. So you sit there and you start doing other things, Netflix, video games, and you can spend that time actually investing and saying, you know what, okay, yeah, I got a little surplus this month, so I got 50 extra bucks that I didn't have last month, in my paycheck or the bills was just lower type of thing. Let me take that 50 bucks and dump it into a brokerage account and grow my brokerage account. So when there is a hot stock that comes along, ding, 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 boom, you can invest into it because you already built up the capital to do that at that time. And that's the thing that I teach people, that are like, just like, they're like afraid to do it. Afraid to get into stocks. I'm like, hey, you can do EFTs, exchange traded funds. I love EFTs myself.
Yeah.
So I tell people the same thing. And they, especially with my soldiers that I had when I was in the military, we would sit around in the motor pool and be on our phones, stock trading. It was like, hey, you see that stock dropped this morning? Yeah. Hey, buy 10 shares. And they're like, okay. So we would do that, and they would be appreciative of that. Come the end of the month or over a couple months, they had a nice little portfolio they built up, and I'm like, okay, good deal. Don't sell it. But what do they do? What do soldiers do? They sold it. They like, man, I made $5,000 off all that. It's just like, but
they're not supposed to sell, borrow.
Exactly, borrow. Yes, but they don't listen. They don't listen. But you're absolutely right. There are ways that the middle class cannot be in trouble. And I thank you for coming on today to walk us through a lot of this, because I know some of my audience, they are not into this kind of stuff. So they probably turned us off like 10 minutes ago. But then again, they probably was listening to it because this was a very intriguing conversation that we had today, and I thank you for that. And so I want to ask you, tell people how they can follow you and support you, sir.
You can check it out, The Perfect Portfolio. We have all our the YouTube content there on our website. If they want to pick up the book, just read it. If you have questions, just reach out to my team. We try and meet with anybody who's really motivated to do it. Put $100 in a brokerage account and reach out to us, right? We have the website, exactly how to do it. Everything's there. And then we always have a company that's evolving and getting better at this. Honestly, there's ETFs that didn't exist a year ago that existed today, right? Amazing stuff, right? So I'll cover those. I interview the fund managers that create them. I know most of the fund managers that create them, so they let me know what's coming down the pipeline when they can, of course, when they legally can, and then we do it. I'm not a financial advisor. I'm an entrepreneur. I'm a serial entrepreneur. I don't give tax advice, but I can tell you that the book is all IRS tax compliant. We had it reviewed by many CPAs, and you can learn the tax codes that the billionaires use. I tell you, the banksters, like I call them, are using buy, borrow, die, but they're teaching you to buy a mutual fund, a diversified portfolio of mutual funds in your retirement account, and pay off debt and all that stuff. There's good debt, there's bad debt. Good debt makes you money. Bad debt is buying the stuff at Costco and Target and Amazon. Start just learn a little bit every single day, right? Take baby steps and learn. It can change your life. I guarantee it. It changed mine. And stuff they taught me as a financial advisor and fiduciary investment advisor, and then learned and spend 60,000 hours. So this is only a 60,000 hour project for me in the last 15 years, and writing 4 books and studying finances every single day for the last 15 years. So it's kind of fun, actually. This is what I do for fun. I don't need to work. My wife and I are good. We have lots of real estate projects coming up and stuff like that, but this is what I do for fun, and I don't have to.
Yeah, awesome. Ladies and gentlemen, Mark Quann. Hey, sir, thank you once again for being here. Great information, great stuff, and be safe out there. Have fun. Continue to have fun. I say that.
Oh yeah.
Continue to have fun, and we'll be happy to have you back on anytime, sir.
Absolutely. Let me know how I can help, and I hope everybody benefits from it. And guys, just don't like, oh, this is another. Just do something, right? Do something. Get to it. All right, guys. Thanks for having me on the show.
Absolutely. Thank you. Take care. God bless.
All right,
Ladies
bye-bye.
and gentlemen.
God bless.
Ladies and gentlemen, Mark Quann, great stuff, and I haven't talked finances in a long time. As we were just talking about everything today, just talking about it, it's like, man, I ain't talked about ETFs and stocks and bonds and all this stuff in a while. And he's absolutely right. There's a lot of stuff that you can do. You can start small. $20, $50, $100. That monthly surplus. You don't have to spend it all or take it all. If you have that little surplus, from your bills, for those that live paycheck to paycheck, I'm talking to, not the ones that, that have constant surplus. But I'm talking to the audience that are afraid to do this stuff because they live paycheck to paycheck. If you have that little surplus, you can take that little surplus and put it away and brokerage account, or envelope even, and then until you're ready to open up a brokerage account, you can do little stuff like that. And then you say, you know what? Okay, I'm ready to take my first step. And then you can see, look at household products that you utilize or companies that you utilize, like we was talking about with Amazon, stuff like that. And nowadays, you don't even have to buy stock at the price that it's listed at. You'll see that Amazon stock is, say, for example, $500 a share. You don't even have to spend $500 for that one share. You can spend $100 to get a quarter of a share. Type of thing. They're doing these things now. That wasn't going on back in my day when I got involved in investing. It was either you got the money or you don't. So, but there's different tricks in the trade. Different companies that facilitate your investment ambitions and stuff like that. You just gotta take the time to research it, ladies and gentlemen. Take the time to read. Take the time to listen. Take the time to watch, and you will be successful in it. Trust me. I talk to hundreds of people that do this stuff, and I'll be the first to admit I am bad. I am that one that is not disciplined. I am that one. But when I'm ready to sit down and do some investments into something, depending on what's going on with the markets, I do pay attention to it. Or see some emerging stocks type of thing, or emerging can't talk industry. I will sit there and be hawkish over that. So, but I'm not a day to day trader. You know, no. Like he said, you know, buy, forget about it. Buy, forget about it. And next thing you know, you get that email or you get that letter in the mail says, "Hey, this is your brokerage account statement." You're like, "Damn, I got that." I was like, it was an annual statement. You know, it was through. Well, at the time, it was TD Ameritrade. I want to say it was. They sent out your statement on an annual basis at the time, and I had like forgot about it, you know, for a minute there. You know, yeah, I was continuing. I had it set up to where it would like auto buy, you know, once it hits a threshold, and then it would just buy that same stock. And I was like, let me sell this. So it happens. But anyways, folks, you know, it's Friday, and I'd like to get up out of here early and give you time back. And I hope you take the rest of this time now to go learn about investing in something. See, there you go. All right, folks, I will holler at you all later. Be safe. God bless you all. Take care, and have a fantastic, phenomenal weekend. And stay out of trouble. Don't do anything stupid. Ciao, ciao. Ladies and gentlemen, thanks for tuning in today. Please be sure to follow, like, subscribe, and share, and go to rpurham.com for more information. See you all soon. Take care. God bless.